Today I am going to explain a very relevant topic from financial reporting standards, that is conceptual and regulatory framework for financial reporting. Before discussing what is conceptual and regulatory framework, let me explain what's the importance of financial statements or financial reports. All of us know what's the purpose of financial statements or financial reports. That is, every business enterprise communicates the business performance and the financial results to stakeholders through these type of statements. So the financial statement should be transparent, consistent, reliable and comparable. So for achieving or ensuring this transparency, consistency, comparability and reliability of financial statements, it is very necessary to standardize the accounting principles and policies. So accounting standards, these are the guidelines for accounting. The main objective of accounting standards is to standardize the diverse accounting policies and practices. So this set of rules, or what we call accounting standards, are useful for the preparation and disclosure of financial statements. Okay, have you ever think about why we need accounting standards? Okay, first reason is for comparison with other companies. That is to facilitate comparison. That is facilitate inter-firm comparison and intra-firm comparison. Okay. Then secondly, to evaluate true value or correct picture of financial statements of companies. Thirdly, to enhance the contents. That is to enhance the credibility and comparability of the financial statements. Fourth one, to communicate uniform results. That is communicate uniform results to external users as well as internal users for decision making. And finally, to improve the quality of financial statements. That is to make financial statements more reliable, comparable, relevant and understandable. Okay, now let's understand what is GAAP, AS, Ind AS, IAS and IFRS. Out of these 5 terminologies, the biggest terminology is GAAP. That is generally accepted accounting principle, because GAAP covers all these 4 items, that is AS, Ind AS, IAS and IFRS. So what is GAAP? Its full form is generally accepted accounting principles. So GAAP can be classified into national GAAP and international GAAP. National GAAP, that is AS, international GAAP, that is IAS. National GAAP means National Accounting Standards, that is AS. Okay, international GAAP, as the name indicates, it is International Accounting Standards. Okay, what do you understand by national GAAP? That is, when a country makes its own accounting standard, it is known as national GAAP, as many countries use their own GAAP, like Indian Accounting Standards, AS. Also, we can talk about US GAAP. This is the standard adopted by the US Securities and Exchange Commission. It includes definition of concepts and principles as well as industry specific rules. Okay. International Accounting Standards, that is IAS, are older accounting standards issued by IASB, that is International Accounting Standards Board. So there is one standard which is followed in several countries, that is International GAAP. It is also called IAS. Okay, so it is followed by UK and several other European countries. Clear? So new version of AS is Ind AS and new version of IAS is IFRS. Okay, first I would like to discuss the need for IFRS. Definitely you must be heard about the globalization phenomenon. This word is used to describe the growing interdependence of the world's economies, cultures and populations. And it will definitely lead to an increasing cross-border flow of goods and services. Not only goods and services, the transfer of capital and technology and flows of investment, people and information. So all countries need foreign investment for infrastructural development. The role of multinational corporations is increasing. MNCs or multinational corporations, it's operate in different countries through their branches and subsidiaries. And I told you earlier that there is an increase in international trade. And also, financial globalization is the new phenomenon of the 21st century. And there is a diversity in international accounting practices. So definitely it will adversely affects capital flows. So there is a need or necessity or a requirement for a single set of high quality international accounting standards. So that kind of standards will ensure a confidence in the capital markets. So we can say IFRS are designed to bring consistency to accounting language, practices and statements that will help businesses and investors to make educated financial analysis and decisions. While talking about IFRS compliance, there is IFRS adoption and IFRS convergence. Do you know what's the difference between IFRS adoption and IFRS convergence? There is difference. That is adoption. IFRS adoption means adopt IFRS as it is. We won't change anything. Okay. On the other hand, IFRS convergence means we can make some modifications in line with major rules and regulations of IFRS. That is preparing our own standard but in line with IFRS. In other words, we can say convergence is when the country's accounting standard board with the guidance of IASB develops a compatible accounting standards. So we can say that countries that are converging with IFRS may sometimes deviate from the original IFRS guidelines issued by the IASB. India has not adopted IFRS. India officially decided in 2007 to converge with IFRS. The ICAI and IASB then decided to work together, collaborate and develop quality and compatible accounting standards instead of fully adopting the IFRS standards completely. So India started making Ind AS, which is mostly in line with IFRS. So that's all about GAAP, AS, Ind AS, IAS and IFRS. I hope it is clear now. Here in this slide I am going to give you a brief overview of IFRS. IFRS stands for International Financial Reporting Standards. The standards of IFRS were issued by the International Accounting Standards Board. IFRS standards were published from 2001 onwards. And one more thing, IFRS is principle-based standards. Okay, then while talking about IASB, that is International Accounting Standard Board, this board is for promoting the standardization of accounting standards. It's emerged on 29 June 1973. It is recognized by the professional accounting bodies in different countries. Some of the countries are Canada, Australia, France, Japan, Germany, Mexico, Netherlands and United Kingdom. The headquarters and secretariat of IASB are established in London, United Kingdom. ICAI, Institute of Chartered Accountants of India, has announced that IFRS would be mandatory in India for the preparation and presentation of financial statements from the financial year commencing on April 1st, 2015. So in the first phase of its applicability, it was stated that it would apply to the companies whose net worth is above rupees 1000 crores from April 2011. According to the revised rules for IFRS, a financial statement needs to involve the following after January 1st, 2009. That is, first one, the balance sheet is to be known as statement of financial position. Secondly, the income statement is to be known as statement of comprehensive income. Thirdly, the cash flow statement is to be known as statement of cash flows. Fourth, the summary of significant accounting policies is to be involved in the notes. And lastly, the statement of changes in equity. The following is the list of IFRS issued so far by IASB. Read it yourself, okay? If you have a clear understanding about these terminologies, that is GAAP, AS, IAS, Ind AS, IFRS, it would be better for getting an insight for our next discussion, that is conceptual and regulatory framework for financial reporting, that we will discuss in next video, okay? That's all for today. Thank you for watching.